It's nearly December 2022, and I'm joined once again by the consummate market commentator and analyst and trader, Doc Holliday. Doc, it's great to talk to you again. How are you doing?
Yeah, fantastic to be back, Al. Super duper. And seemingly as we move towards the close of the year, there's been a slight improvement with activity around small caps as well. So yeah, not too bad at all.
Good. Yeah. Well, of course, it's been a chaotic year, hasn't it? I mean, since we last spoke, we've had two governments. I think we've of course had the Kazi Kwarteng disaster budget and the trust administration, which was gone in 45 days, and now Rishi and Jeremy Hunt have come in, seemingly stabilized the ship. And I think certainly markets have stabilized, but also there's a sense that there's a bit of optimism around, I think, in regard to the UK's ability to go it alone. What do you think?
Yeah, I think so. And look, I mean, there's been a lot of conjecture and comments about Rishi Sunak and the fact that his personal wealth position, his wife, that these guys have all got the nose in the trough and will be feathering each other's caps and all of this sort of carry on. And I kind of understand it. I understand with the cost of living crisis and, there's soaring prices for both energy, fuels. It's a difficult environment for most people to sort of operate. But, we can't forget that we submerged ourselves in a capitalist environment, very much so with the stock market. And as much as I hate to say it, these guys are probably the right guys to help move things in the right direction. And, whilst it might be some pain for the everyday working man, of which, my roots are well embedded, in the now, for me, I'm feeling more optimistic, and I'm hopeful that these guys are sufficiently motivated in order to do a good job and steady the ship and move things in the right direction and get the country up and running again and get a bit of strength into things. Because as much as as Great Britain as a country on its own again, and regardless of your views on Brexit, we've been a force to reckon with historically, and I think we can be again in the future. And personally, I'd much rather go through the next few years in a challenging environment, knowing that we're not going to have to carry some of these other communities in Europe through what I think is going to be a really difficult decade. So yeah, for me, I'm very much supportive of what's going on. But I suppose I'm in a privileged position where financially I'm secure and stable, and I appreciate there's lots that aren't. So yeah.
I heard some really interesting commentary yesterday. Of course, so many countries for the past 50, 60 years have imported food because it's been the cheaper option. But of course, with cost inflation now, that option for many countries, including the UK, has gone out of the window. And many farmers are now seeing an opportunity, and they are investing in expanding their crops. Some are returning to arable crops. And of course, we've got new vertical farming techniques that foodstuff, salads, and so on can be manufactured all the year round. And of course, this could create huge job opportunities in the UK. I think we're going to see a lot of new industries coming to the fore. And, in many ways, the old economy is going to come back because of the issues of importing and cost inflation.
Yeah, agree. And you know what I think as well, Al, a point that we should never forget is how, society really underappreciated some of the Eastern European and sort of Asian countries that provided an incredible workforce, doing jobs in the caring system and farming, and we really didn't appreciate them. And now, unemployment is probably going to drop a fair old whack because there's going to be jobs galore. I mean, are these the jobs that people want to do? I don't know. I see some people. I've got a friend of mine that's a electrical engineer for a company that make kitchens, Howdens, and he said, since a lot of these migrant workers left and returned back to their home countries, the price of employing somebody to pack boxes has gone from £8 an hour to 15 quid an hour. I mean, it's ludicrous, and everything seems to be going that way. So look, I mean, I'm pretty sure that there's going to be a lot of job opportunities. Whether the jobs that people want, I do not know. I think we need to be firmer with people who have lived in a world where they can cherry pick the work that they do. If you're healthy and you're fit, healthy and fit, then you should be out in the fields if necessary. And if not, go and get yourself sufficiently educated, motivated, or whatever it might be. Because, the reason that Britain had an empire, a tiny little country had such a strong empire historically, is because we were innovative, hardworking, and energetic. And I think it'd be nice to start seeing that coming back. But a few bumps in the road ahead, I'm sure, but there we are.
Indeed. But I think what is encouraging, of course, is that with these new burgeoning opportunities, the small cap sector, obviously, which is where our focus is primarily, seems to be in pretty rude health. I attended the one-to-one mining investment forum yesterday up in London, and there were hundreds of booths full of mining execs, both from the AIM market, the Aquis market in the UK, the TSX market, the ASX market, and these booths were full. I mean, there were investors in there wanting to find out about the companies, talking to the chief execs. It was, and I spoke to many companies there, and they all said it had been their busiest one for probably 10 or 12 years, which is very encouraging. It shows, I think, that the canny investor is really now seeing great opportunities in the sector, and obviously the mining and resources sector is one they see real potential in.
Yeah, and I think stripping back and going to basics in some respect, and going to these forums, getting familiar with the companies and the directors and the story is super important. And I think, particularly during COVID, we evolved and accelerated quick into a really uncomfortable. I was really uncomfortable with how these tech companies were sprouting up left, right, and center, and they were realizing amazing valuations, and there was a lot of money that had transshipped and moved into the sort of crypto Bitcoin space. And I think, look, a lot of people made fortunes. I don't think it's over. I think there's definitely legs within that space. I think, like the .com boom, there'll be a much smaller number of quality companies that survive, rather than a lot of these sort of speculative idealist businesses that never really had a structure that could take them forward, and poorly capitalized or worse, absolutely corrupt and fraudulent, and that's really sort of distorted people's views of the world. We were fed the narrative in the media was moving away from fossil fuels. It was moving away from, it was all about this electric world that we live in, renewable energy, ESG, and look, again, we spoke with the last time we spoke, we discussed this point. I think there's probably some legs there too, Al. But now we're starting to see people revisiting, good old fashioned, resource companies, and they're getting energetic about it. They're getting stimulated by what they're hearing. They're realizing if this renewable world is to happen, then we've got to go out and find huge amounts of copper. We need to find lithium. We need cobalt. We need nickel and zinc and tungsten. And I think, we've become a little bit, that this sector has become quite forgotten, and tomorrow's world will encompass all of what we've discussed, including some of the good old fashioned resource companies. There's a job to be done. There's a massive under delivery, and there's a massively reduced number of companies that are out there exploring, and as a result of that, we've seen the shock in price of oil, and how that went from 35 to 120 or 100 plus dollars as a result of just lack of underinvestment within that sector. And we've seen that undernourished and underinvested resources sector too. And I think there's a huge opportunity there, Alan. Not surprised to hear that these booths are filling up and people are getting getting active and stimulated and attending again.
Indeed. So moving on then, Mike, Doc, what stocks have caught your eye, given the backdrop, given what we've been discussing? What stocks have caught your eye?
Yeah, look, I mean, Mike Dockstock, it's the name is irrelevant. I think we talked about Harland and Wolff, and I think that was based on some very simple when we last spoke, or when I first started chatting to you more recently. And I think that, and I know you've covered Harland yourself, and I think
Yeah.
the rationale was very simple. That there was a statement made in the House of Lords, and I'm speaking very quick to just broadly cover it. That suggested that all of the spending would be internalized and kept within the UK. There were 6 shipbuilding companies that could help furnish all of these sort of contracts that would be awarded. And then within the space of a few weeks, they sort of said, well, actually, 20% of this might have to go to Europe because we're not sure we've got enough bandwidth within the UK to actually fulfill that budget and that spending commitment. And what that said to me is, well, they've obviously looked at Harland, then they've looked at Barrow and a bunch of other different shipyards and gone, well, no, we're gonna fill them, and we're still gonna need to, we're going to need some support in getting the rest of it done. And that told me there and then that we would probably start to see some activity and some opportunity within Harland. Now, over a 6-month period, we saw the share price half, and that was bitterly disappointing for anybody. And it did start to, cause me to question whether I'd read things correctly, whether the positive words in the House of Commons towards specifically the Harland and Wolff shipbuilding yard, I got it wrong. And hey, lo and behold, now we fast forward 6 months, and they've announced a whole bunch of contracts and interest, and now that landscape's changing dramatically, and shares have gone from 5 or 6p up to 25p. And if things are to be believed, this should carry on going. I'm sure they'll raise some money. I know there's been a lot of investment, but I'm sure they're going to raise a little bit of cash as well to help them on that journey. But strongly believe Harland and Wolff will have it stay in the sun. And Ireland McGee is one of the gas storage facilities that they've been battling over for a long, long time, and it shouldn't be forgotten. So anybody that's interested in Harland and Wolff, just for its shipbuilding, don't forget that little gas storage facility at Ireland McGee, because that could be the jewel in the crown for them. But interesting times ahead, and I think, I'm glad we covered it now. It's one of those red-faced stocks for a good few months where people said, well, I think you got it wrong, and the price reflected that. But no, we're back on track, and things are looking rosy for Harland. So yeah, long may that continue.
I agree, and I made the point in the podcast. Also, of course, yesterday and today, Chief Exec John Wood bought shares, I think, at 23 point something p yesterday and 24.7p today. So he's actually buying in the open market, which is a great sign, and that should really encourage investors. But as you say, Ireland McGee actually can or has the potential to contain up to 25% of the UK's natural gas requirement, which is, it's huge in its own right. And once that gets the green light, it's going to revolutionize Harland, I think. But also with this new contract, of course, they're upskilling the workforce. They've created 1,200 new jobs, and that's going to make them competitive for contracts worldwide, so they can tender for contracts with other navies around the world to build vessels, and they've got the capability and the scale to do it, which is really exciting.
No, absolutely. And let's not forget, Northern Ireland, it's had its troubles that are well documented, but I think after it became the capital of was it the capital of culture or one of these sort of things, big European investment into that city, and really after that we saw a real change in attitudes. And we know that in order to try and keep some stability, everybody has to be, or there needs to be opportunity for people to be able to earn a good living. And that's something that's been lacking for many, many decades in Northern Ireland. So nobody more motivated than the Northern Irish government representatives and the British government in actually assisting with that. So yeah, really positive. And I noticed you talked about ECR in the same podcast that you did. And look, I've had the benefit of speaking with Andrew Scott on numerous occasions, one of the guys who's gone in there. It's been an arduous job since Andrew joined the company. He obviously comes from a media background, so I guess he comes from within the world that we've spent some of our time. Alan, I think he's a good, solid guy, and he's had a difficult job. And now we've got a pragmatic CEO within the business. And again, I'm sure there's been some very difficult conversations to be had coming in, but they seem to be making all of the right sort of noise now, getting some deals done, looking at being, streamlining the business where necessary, cutting away a bit of fat or waste if needed to become the company that perhaps Craig had a vision for, and I'm really impressed with the new CEO. So, Andrew Hayworth, I'm almost certain the deals that he's starting to pull together and the structuring behind those deals are telling you that that is quite a savvy guy, and I'm hopeful that I'll speak with him a little bit more, and again with Andrew Scott, and stay abreast of that story. And as with all of these things, people will start to crow, well, they'll need to raise a bit of cash, but let's not forget they've got those assets in the Philippines. They may well, may well go. They've got a massive sort of land package and a number of properties in within their sort of current portfolio. Is it all required and needed? Because they were questions that were asked when some of these things were paid for at the time. The company was well capitalized back then. So I think what I'm sort of saying is I think the business has its own ability to generate a bit of its own cash if needed, and Hayworth seems to know how to spread it and take it a long way. So I'm confident, again, as you are, Al, that there's value there, but they're not on their own ECR. There's a bucket of companies that I think have got some interesting times ahead, and I mean, look at trying to find these ones that have gone and raised money and have the ability to now go ahead under its own steam. We talked about Contango, so I'm not gonna witter on about that one again. If anybody's interested, they can pick up the last kind of interview that we did. But they've subsequently gone and raised £7.5 million. So all of these sort of people that have said, well, I like the company, but I'm not too sure whether it's got a financial pathway or runway ahead of it which allows it to develop its assets. Well, now we know with that £7.5 million with no discount, that's a sufficient interest. One shareholder took, I think, 2.5 million, a single individual, and the word is on the street that there was another guy who took £1 million or a little bit over £1 million too. So, when you've got these kind of people putting that sort of cash up, it tells you that they're probably know a lot more than you and I, and they're probably savvy guys. And look, I'm long of the opinion that Contango presents a great opportunity, and it's in that horrible, dirty coal sector, which is grabbing all of the news and attention in Zimbabwe now. There's a lot of interest out there.
Yeah, rightly so too. Given the energy crisis that we're facing, all of these coal mines are being revisited, coal-fired power stations being recommissioned again. So there's a huge market for it. But also, as you say with Contango, the fact that there was no discount on the raise, you've got two shareholders there, one putting in 2.5 million, one putting in $1 million. That tells you all you need to know, really.
Well, I think so, and I think if the shares are trading at 8 or 10p, then it might be a little bit of remiss to sort of appear to be overly speculative or excitable. But I think at 6p, knowing shares have traded at sort of 9-10 pence with a lot less cash in the bank, and that the development stage is always awkward. I did one of these live chats this week, and one of the guys come on and wanted to talk about Emmerson, and he said, do you think there's a missed opportunity here for investors? And I said, well, Emmerson's a massive play, but when you go through this developmental stage, or you've got to raise big chunks of cash, and you're in these tough markets, the market really does crucify you. And I remember when Harvest Minerals had sort of said we were going to go through a build project and we were going to put a plant together, and they'd guided that they would sell some of their remineralizer, and it's not quite a potash or fertilizer. It's a remineralizer, so it's a slightly different product. They went out to the Brazilian market and said, hey, look, we've got this product. It's about 90% as good as your fertilizer, but it's a third of the cost. And we think this is gonna help farmers, particularly cut down some of the spend on fertilizing ground. And for the first year or two, they just could not get out the traps. But then over the last 6-12 months, you note the narrative now from Brian McMaster, the chairman there, and he seems like he's full of beans again. The shares went from sort of 2.5, 3p to 16, 17. They're softened since. But if they keep on, exceeding expectations and delivering, then you're back in the game, and there's no end to how far that can go, because I think there's 100+ years of mine there. and it's gonna spit out 20 million plus a year in free cash. And that period of time, which perhaps Emmerson and some of these other companies are struggling with, they've been through that build stage, that developmental stage, the having to get the sales in line with expectations stage, or not, as it may have been at the beginning a couple of years ago. But everything's starting to come together now, and you're starting to see some activity. And I think companies like that, I'll have a go. And I've been talking a little bit this week about Longboat Energy, because that was flagged up to me, and somebody said to me, Doc, have a look at this and see what you think. And Hellhammer was the chief operator at Faro Petroleum. Faro was taken out by DNO for, I think it was a good 800 million plus. It was the darling of the small cap markets once upon a time. He was a renowned reservoir engineer when he worked at Shell. They IPO'd at £1, raised a bit of cash. They've gone out there, they've drilled, I think, a number of wells. I think they've drilled about 8 wells. They've had some misses and some results, some positive results, very positive. But those misses have really hurt the share price. And I think when you look at a company that's got 22 million quid on the balance sheet and a 14 million pound market cap, with a management team as capable as Hellhammer and the team that came over from Faro Petroleum, they're nobody's fools them, and they're going to do proper deals. And I look at some of this distressed shit in the space, particularly oil and gas, and I sort of go, well, these are on a 14 million valuation with that management team. They've already got some positive results and wells under the belt. They've come out and stated, we're going to look to get a 3 to 5 well program for next year. We've got a hit rate of about 50%. So yeah, for everyone we miss, we make one. And we're going to look to monetize the assets we've already got. I don't know how that's been overlooked so far, but I know there's been some selling. Richard Snell has been selling down a whole bunch of different stocks across the market. This is one of them. Stifel took out the tail end of his position, is what I was told from my sort of market intel. And I'm pretty confident that, once these guys have shifted it for 10 or 15%, that's the usual modus operandi here. Then, we should start seeing it get going. So, another interesting one.
Excellent. So are you focused purely on resource stocks, Doc, or are there others that have caught your eye as well?
No. I mean, look, I've talked a lot about, Poolbeg and hVIVO, which was the former Open Orphan when we last spoke as well. And, again, one of these companies, I've been talking to loads of people about Poolbeg, just to get based on the fact that they had a market cap of 20 million quid and they had about 20 million quid in cash. And, knowing how difficult that space has been after that big boom during COVID, for me, seeing the price as depressed as it was at 4 or 5p, 6p, it screamed opportunity, because the people behind Poolbeg Pharma, which was sort of spun out of Open Orphan, they're enterprising guys. Capital Freel's an enterprising guy. You may have or may not have seen that they've actually taken on the 2 guys from Rearbold Resources and are trying to replace them now, because they think they've done a stinking job. They've taken about £700,000 in remuneration and bonuses, and these guys, they're not prepared to sit around on their hands and watch others taking the mick when they think they can do a proper job themselves. Now, I don't want to comment too much on the RBD thing, other than to say, if I was an RBD shareholder, which I'm not, I'd be backing Cathal Friel over the 2 guys that are co-CEOs in that business now, because I think you'll get a bang from your butt from Cathal and the gang rather than these 2. But what I would say is, rightly so. And I think for investors to see people who are active like that, when we look at Poolbeg, the argument was simple. These guys have got a track record of not just sitting on the hands. So I think there's deals to be done. I think Poolbeg may well find a deal or 2 yet, as well as having their own pipeline of drugs that are being developed, and a whole array of work that they're doing, technical work, clinical work, research and development work. I wouldn't be surprised to see them do a deal or 2. And look, the shares are 10p now, and there lies the opportunity. hVIVO bundled along the bottom for 9, 10, 11, 12p. It didn't matter how many times you say to people, look, there's good opportunity here, and the pragmatic, the dynamic, the innovative. They won't just sit and do, they won't just keep pushing an old story, that they'll be out there looking for new opportunity. And let's not forget, they've got government contracts. People didn't want to know. Now the shares 14, 15p, suddenly they're coming to life. So that, I think there's opportunity in more than just the resource sector. I think there's a market-wide opportunity.
I agree. Well, I think Poolbeg, of course, got that 2.3 million grant from the Irish government last week, which was a huge threshold moment for the group. But of course, the chief exec there, he's a bit of a clone of Carl Friel in many ways. He's Jeremy worked for a company called Inflazone beforehand, and he joined that company. They sold it 3 years later to Roche Pharma for $450 million. So he's got a track record too. Jeremy Skellington knows what he's doing too. So yeah, I couldn't agree with you more. Big fans of both.
I'm back these people, again, I sound like a broken record, but back the Held Hammers of this world, back the people that have proven that they will get something done, because there's some of these companies that are kicking around the market on 20, 30, 50 million quid valuations, and the pumped up lifestyle companies will never get very far, and the directors are just not motivated to deliver a bang for your buck. They're only motivated in drawing down cash for their own personal requirements, and I think we've got to kick those guys into the long grass and really start getting behind companies that are showing that they're, a bit more, again, keep using the same phrase, but, innovative and pragmatic. And I don't mind investing money into companies. And if I feel I've had a proper bang for my buck and it's not work, geologically, it just wasn't there, or, the technology, when it got to a certain point or tech gets to a certain point in the cycle and trials fall over, or your concept flops because I don't know, innovation has moved on, which I'm sure happens. There's some great ideas, but they get lost because, frankly, we move past and through that sort of part of evolution. I don't mind losing a few quid, Al. If I think that I've had a bang for my buck, it grips my shit when I see these people who are just, misleading the market on a day-to-day basis and getting away with it. So I think it's really imperative.
As you say, that there are too many of those people out there running companies, taking money out of the company to fund their own extension at home or buy their property in Spain or whatever. They're not interested in actually delivering quality and value to shareholders. But the guys we talked about here very much are, and, I know Carwell and Jeremy Skellington, and those are two guys that are, you back them whatever company they were in.
Yeah, and look, I know that he's not got an unblemished track record. I was around when Fastnet went belly up. So not to want to be a Cathal Friel sort of fan here too much. I don't want to be blowing too much smoke up his backside, but I do have a lot of time and respect for him, and I agree very much with what you said. But I think people like that who can roll with the blows, keep coming and keep going, and not sit on the hands too long and keep getting deals done, they're the people to get behind. And, I think I might have talked about more acquisitions when I was in one of the last interviews, but I've been parroting on about that for quite some time. And they've announced to the market that they're going to do a deal. They've indicated that transaction will happen at around 2.25 pence. Shares, I think, suspended at 1.2. I'm a buyer, a net buyer of my position there at probably a penny or under, actually. So I'm one of the lucky ones. But I immediately started people saying, oh, well, you can get a premium transaction away in this market, and who can, and that valuation's insane. 40 million quid, it can't be worth 50 million quid, it can't be worth it. 60 million quid, not a chance. But I've sat and had a conversation, and these guys have gone around and they've started to talk to people. I don't know if you've had any contact with them, but it's the CEO at Megasteel, Nigel. The guy's been in the industry 30 years. He sits on all sorts of committees and authorities within that steel industry. He's been selling steel on a third party basis. So they're not a foundry. They're not out there, in a blast furnace making steel. There's none of that. He's just literally a middleman. There's a team around him, a small number of people, and he's making 9 million quid profit a year. Why on earth can't it come on a 50 million valuation, or why on earth can't they do a deal at a premium? Proper company, 30 years track record. I think there's only 2 periods in the whole evolution of the company where they've gone backwards. Other than that, the 28 of the 30 years, year on year, he's making more money every year that he's in business. And, you know, he was as open as any book I've ever had the time to sort of speak with. And he said, look, you know, we sell X percentage of our steel into the housing industry, and we could be in for a tricky couple of years. But let me tell you, the last time we had a problem in the, you know, with the housing industry, this is how we performed, and he was still able to grow that business through that period. So he's not one of these guys that's coming in and feeling around a recession for the first time. He's been through one, and he's operated a business successfully. So again, I don't want to be out there blowing too much smoke up Nigel's ass, but I think he's a smart guy. I think more acquisitions, should they complete that transaction with Mega Steel, we're in for a really nice period of time. And there's a couple of other companies that are going to be coming to market in early next year, and I'm sure we can talk about them after Christmas. But, you know, companies that are making cash coming to market with a track record. I mean, if we moan as investors about all of these heavily speculative companies, and then when you find the ones that actually just deliver hard cash and they're not that sexy, they're not that speculative, they just do a job, we moan about that too. So it's just fascinating in the mentality of investors, eh?
I know, but I think your point on steel there is very valid, because we're emerging from COVID. Many economies stopped dead pretty well, so there's a lot of nascent demand and pent up demand from that. You've got the Biden infrastructure budget in the US, which is going to invest huge amounts on rejuvenating the creaking infrastructure, which will include lots of steel. China's consumption is legendary, as we know, and of course that applies to other economies too. So they're selling into, I think, a burgeoning marketplace. So yeah, more acquisitions, please.
Absolutely, and I think that's hopefully what they're going to do. They're going to go and do a couple of acquisitions. One of the acquisitions that Mega Steel did was a huge success. It's happened over the last couple of years, and that's really elevated that business and really helped to take it forward. And I think, you know, when I spoke with Nigel, I asked him a couple of cute questions to see how much sort of spin or puff he wanted to put into his response. And it was really, really sort of plain Jane, almost disappointing, factual response. And that is, you know, we don't need to hedge. We buy steel and we sell steel. We have a network of buyers. We have a network of sellers. We work the gap in between. We're really successful at what we do. We buy lots of it and we sell lots of it. And we don't need to, and that it was as candid as that. And I thought, you know what, fair play to you, because you could have quite easily started to talk about how you're the smartest guys in town, and he didn't. He played it really down actually, and he just said, look, Mike, this is who we are and this is what we do, and we've been doing it well for 30 years.
And the simplest models are the best, often the best. That's great to hear. So Mike, is there anything, Doc? Is there anything else you're looking at the moment?
I mean, look, there's a bunch of different things. You know, there's always things to look at. I think, you know, I always want to try and end with the same comment that I've been trying to promote for the last couple of years, and that is, you can listen to voices like ours on these interviews of where there's good opportunity, but you've got to hone your skills and actually work out who you are as an investor or a trader. Are you a short-term momentum guy? Are you a bit more of a long-term value investor? Are you looking for something? And identify the risk profile that fits your characteristic as an investor. And once you start to refine yourself within that sort of area and you build your identity up, then you can listen to these interviews and these podcasts, and we can talk about how you know, Morocco has pretty much reduced taxes and royalties, and are a big, you know, and they're signing all sorts of agreements now with the UK. And, you know, if there's ever a time for that country to be open for business, it is right now. So therefore, is there an opportunity in sound energy? Is there an opportunity in Emmerson? Based on that, I mean, I guess what I'm saying is, I really want to try and keep pushing and promoting that argument of know who you are, rather than just following all of these endless suggestions. Because I could talk about sound energy and where it's gone wrong and the risk, but, you know, a lot of people don't realize is you can have the best business with the best management, but if they're in the wrong jurisdiction or there's some political wrangling or internal infighting, nothing ever gets done. And therefore, it doesn't matter how good that opportunity might be with Sound or Emmerson or somebody else. You know, Morocco's a difficult jurisdiction. Well, what we can see now is Morocco is not a difficult jurisdiction. If anything, quite the opposite. And therefore, should we be looking for potential investment opportunities there now, because they're becoming super competitive? So look, I'm happy to share a few ideas on companies, but I'd much rather promote that sort of argument of learn who you are and learn what your identity is. And, you know, and when we listen to these things, we've got a better idea of, you know, the relevance to, you know, that opportunity at ECR, where it is in its cycle, or the opportunity risk profile to all of these things.
Yeah, indeed, Doug.
And that can't go forgotten.
Yeah, that I think is the best advice of all. Know who you are, know your investing style, and stick with it. And just look for opportunities that way. You know, and if you're in a particular industry yourself, you might understand the dynamics that drive that industry. You might be able to identify some undervalued companies within the industry you work in. So there are all sorts of ways of looking at it. But Mike, Doc, we've been talking for ages, and it's been great to catch up again. We're going to catch up again after Christmas and look at some stocks for the new year. Just remains for me to say, Doc Holliday, it's been great catching up again, and many thanks for joining us.
No, much appreciated, Alan. Look, I'll get a bit more of a fast fire round of companies that I think are worth, you know, researching, because honestly, I think, you know, I could give 10 or 20 companies, and I'm pretty sure that between yourself and you know, a few others, myself included, we could probably find out, you know, a few decent winners within that bunch. But yeah, look, I'll be a bit more sort of refined in the next one. I'll try and give a few more names just to help you know, the listeners out there trigger a few ideas or a little bit of conversation, at least provoke some thought, and that's what we're here and trying to do. So look, very much appreciate your time and your platform, and all the very best for Christmas, and to all your listeners as well.
And to you, Doc, as well. Merry Christmas and a Happy New Year.